Very good afternoon, everybody. Charles here, Frgnt Daily Chart Analysis. Fun Frgnt Coupon Friday, the 15th of May 2026. We're just approaching 10 minutes past 1 local time here in Milan, and the chart that you do see on screen is POIs. That I should be extremely happy at if I would have taken that position. And it leads me nicely really onto introducing the reason why I've decided to do a video about the topic. So despite my analysis, let's start from there first and foremost. Let's start from the top. If we go to ideas, where were we? POIs. POIs. So 2 hours ago, so pretty much before the entirety of the move, price looking incredibly bearish, coming into that area. So of course, the best looking play is essentially what we're getting now. However, over the last, let's say, 10 years, almost 10 years, a decade, in fact, probably ticking slightly over a decade, to be quite honest, but between 7 and 8 years, I'd say, of full profitability and consistent profit. And even with that then said, in the last 5 years, I've started taking investment capital or investor capital that I'm now trading as well as personal funds and prop firms have now gone to one side. Regardless of all that experience I have in the market, sometimes it just must be said that just sometimes you're not feeling a particular position. And I think that's fine. And in doubt, you've all heard the saying before, in doubt, you simply stay out. So over the last years, we'll say 5 years, I've developed a strategy that allows me to take positions slightly in a more aggressive manner, particularly if I am against intraday perspective, which I most certainly would have been if I was to look at taking Gbpcad sooner rather than later. But I've developed that strategy to allow myself to take those positions. But I do like to take those positions when I am filled with a lot more confluence in that particular trade. So as you can see, Gbpcad was looking great for at least a 5% return there. If we go down to the lower time frames, particular 5-minute time frame, you can see where I was scoping that position. But admittedly, as I said, I didn't take that position. I really didn't. And although it's charted, I've journaled it, I've come up with some conclusions about the reasons why I didn't want to take that and why I simply wanted to wait for the better case scenario, which would have been price, well, as I've pretty much broken down on the analysis this morning. That's exactly what I'm waiting for. I want to see a shift of that 15-minute structure. Now, of course, again, back to the reason for the video, of course it hurts when you see price going in your direction, you understand a way that you could have potentially taken that position, but still just revert back to yourself and what you know and understand that, well, just because price moves in a direction, it doesn't necessarily mean that that was the best time for you to have been looking to enter that particular position. And as I said, I've journaled that position, not as I've taken it, but could it have been a missed opportunity? Absolutely, it is a missed opportunity. And then I must be devil's advocate to try to give reasons why I should have taken that position, but I also must be realistic in the reasons why I didn't. And also I have to understand that despite the decade or just over 10 years of being in the markets, I am very much so still human. I am still yet to automate my trading strategy. Therefore, I suffer from all of the elements that we all know about in trading. FOMO, wanting to take trades when they're not quite ready. But the difference is that I suffer from those elements a lot less. As you start to increase your experience in the market, you simply just wait. You set an alert above or below, and you get on with your merry day and wait for those alerts to trigger. Hence the alert here, limit long. As soon as I'm to get that alert, I recognize, right, it's time for me to head back to the charts. Do we have that break of structure that I initially wanted? Can I now be looking to take that limit long position? So it's as simple as that, right? Once you start to gain the experience in the market, you understand what you need to happen in the market first and foremost, and then you reanalyze to ensure that your bias is correct as you start to move forward in terms of looking to take that position, of which I will see when the alert returns back down to these lows. Just redouble check that, I'll have to put that slightly higher, in fact, just redouble check that your trade and the perspective still aligns, and then you'll be looking to take the trade post your entry criteria. Now, as I've said, it looks like a very grand position on screen, a nice 1 to 5 to end Friday. However, it's not to be at the moment. And the reasons for not taking that is, to be honest, using the DXY as my main level of confluence, which I really can't stress enough. Looking to those highs, of course, we're expecting a potential reaction from that daily order block. Of course, we're expecting a potential reaction from that weekly 50 MA. But in all honesty, I didn't expect a turnaround with such immediacy. My thought process was that when price was going to be up towards those areas, I was expecting the gap to be filled first and foremost, hence why I was very reluctant to look to take an aggressive long position on Gbpcad. Now, you're probably asking, well, what's the relevance that Gbpcad has? Well, of course, if the DXY continues to push higher, of course, US dollar CAD will also look to follow suit. And then I have to ask myself, well, what is the correlation then between US dollar CAD and pound CAD? And I can bring that to your attention now. Of course, when US dollar CAD looks to take a dip in the market, of course, pound CAD also will have the inverse effect, and that's why we're seeing pound CAD move to the highs as the DXY looks to short. And then we're looking for the confluence then across US dollar CAD as well, which you can quite clearly see here. I simply was looking to gain the confluence from US dollar CAD to almost push myself to want to take that aggressive position on, excuse me, Gbcad longs. But I figured, well, actually, well, before we get to that, what you can see here is exactly the inverse of Gbcad. We're seeing the short move off US dollar CAD, and then we're getting that long move on Gbcad. So I think what's also relevant to understand is, would US dollar CAD be ready to short as well? So that's my second thought process coming into my mind when I'm looking at, okay, should I really be eyeing up a potential aggressive long position on Gbcad? Because ordinarily, looking at US dollar CAD, I don't believe we are in a position where I'd be looking to short. So if you see my confluences at the moment, my thought process was gauged towards DXY pushing slightly higher. Do I have a reason to understand why the DXY would push slightly higher? Then if I marry that up with a confluence or a correlated pair in relation to the primary element of the DXY, then US dollar CAD. Would I be ready to short US dollar CAD based on my higher time frame analysis at this precise moment? The answer to that would have been no. I would have at least expected price to want to push up into its 4-hour order block before looking for a reaction from that area as well. Now, when I make the screen slightly well, not smaller, but zoom out for you, you can then look to understand why I didn't believe that Gbcad would be ready in the immediacy, because if anything, I would be expecting UCAD to pop slightly higher into the refined area within that 15-minute time frame. And at that point, the question would be, well, US dollar CAD looks like it's in a great position for a potential short. Do I necessarily want to trade US dollar CAD? Well, that's a separate question and a separate answer and a separate topic in itself. But I was looking particularly at Gbcad. So what that would mean for Gbcad is that Gbcad could have potentially rolled slightly shorter as well. Not necessarily into this 4-hour order block, below on the 4-hour time frame, but there could have been every reason to understand why price would want to dip slightly lower before then giving me that reaction. More to the point, on the particular traded pair that I was looking to speculate on, US dollar CAD, I didn't have any clear bias, or, well, I certainly had a bias long, but I didn't have at that stage any real clear reason to look for that long position based on the fact that price on the 15-minute time frame was making, we'll say, lower low, lower high. As price came back down into this area, my entry could have been exactly where the lower low could take place. So again, the confluences were kind of stacking against this immediate long position. Now, what we have coming to the markets now, if I were to open my trading platform and understand what is going on with price action, I can at least now look to say, Well, first and foremost, the 4-hour order block held. This was an old 4-hour order block that that I placed on the market as a result of this morning whilst I was charting. The previous 4-hour candle was incredibly bullish, leaving a beautiful wick to the lows. Now, with that said, I asked myself the question, well, what exactly is the hold up? There's always a reason for price to be wanting to do something. And it was for me then to look to identify and investigate what that reason was. You take a scroll to the left and you understand, okay, well, at some stage there most certainly was a 4-hour order block. It was mitigated. However, it is an area in the market where price is failing to break and close below. That was then reconfirmed as a result of where price literally closed to the T on the lows of that 4-hour order block. And now we're having the confirmation that, okay, Charles, now it is time to potentially look for price to return back down to the area. Now we're even seeing a bullish 4-hour candle close via that order block, which is a great sign to restart the process again. And in addition to that, we finally have a break of structure on that 15-minute time frame. So it's a bit of a breakdown to describe that although you may chart, although you may have a great forecast of where you believe price will go, even referring to the DXY, overwhelmingly long bias from this weekly order block for the last month. That's fair to say. I was expecting a reaction from that. If you look through my previous videos, or even my previous chart analysis, you will see that I was forecasting long positions from the DXY. But that does not mean every day I would get to the chart and immediately look for sell positions on GU, EU, and AU. It needed to make sense on the pair that I'm first and foremost looking to trade them. And what I mean by that is set up, entry criteria, and then I ask myself the question again, does this trade make sense? So again, Gcad, I get to the charts this morning, I understand where we are. I'm using all the confluence around me. I'm using the DXY. I'm using a correlated pair such as US dollar CAD, then looking at GCAD again. And I'm then coming to a bias that, okay, I understand my forecast on GCAD is long, but am I ready to be trading a long position on GCAD? And I think if you guys were just to take a listen to this particular video a couple of times over, you'll then understand that it's great to have that forecast and it's great to have that bias. But the second element of the trading element, first and foremost, understand how price action works, understand how price reacts to certain areas, and then you bring in your trading elements, which is your setup criteria, i.e. breaks of structure first and foremost, and then your entry criteria, which are, of course, can be your lower time frame break of structure. It can be an aggressive type of position that I could have taken on the 1 minute time frame here on GCAD, based on the fact we've had a 1 minute lower time frame break of structure. See, this was all charted, ready for me to trade. The 5 minute order block down at these lows as well, looking to have taken that trade, but I didn't, right? And I didn't for the reasons that I've already gone through. But what it must be said is, first and foremost, or I should say lastly, when in doubt, you're not forced to risk your money when trading, particularly when it doesn't matter what type of accounts you're trading. Even if you're trading a couple of £100, treat that as if you're trading $500,000, $250,000, whatever, 100,000. Treat it all the same and understand that not every trading opportunity needs to be an opportunity that you need to take part in. And I think this is a grand example of the fact that, yeah, I'm feeling a bit salty about it, I must admit, because I recognize how I can take those positions, but I also have valid reasons why I didn't take that position. And for sure, if I would have taken that position, knowing everything that I have just explained, based on the fact that I thought DXY should have rolled a little bit higher, based on the fact that would I be looking to short US dollar CAD at that particular moment? If not, then I really shouldn't be looking at taking a long on pound CAD, which is the inverse operation of US dollar CAD. If I'd have taken that long position, knowing all of that information, and had taken a loss on that position, now I truly believe, and I have been in that position before over my 10 years of trading, where you recognize a position that you shouldn't have taken, you take it because it looks good, and you lose, journaling that position is probably one of the worst feelings as a trader. You can take winning positions where you recognize, okay, I was a bit lucky here. I probably need to stop doing things like that, even if the position came out in profit. And you can take really good losses as well. For example, Gbpcad now. If Gbpcad comes back to that 15-minute order block, I wait for a lower time frame break of structure, and I take a loss now in that position, I can journal that quite happily as, well, that was a textbook criteria, a textbook entry from a valid point of interest. I had to take that position. That position came out in a loss. That's a good loss. So aside from taking a position which could have been a good position financially, based on, let's say, my psychology going forward, I would then have to raise questions. Well, Charles, why do you bother doing your analysis across the DXY? Why do you use correlated pairs if you're simply just going to ignore them anyway? So it's all about the longevity of trading and understanding all of your technical analysis, really refining your technical analysis, understanding price action, and those are going to be the key elements to you getting long-term profitability out of the market. So no one said it was easy, first and foremost. No one says that those feelings as a trader that I'm sure the most of you listening to this are certainly going through or have been through, they really do not disappear. I must be honest, they do not disappear, but you're able to control them using certain methods, i.e. using your alerts, understanding what works, understanding the best areas of your setup, and understanding that just every position in the market that seems valid doesn't mean that's a position that you need to risk money on. So thank you very much for your attention as always. I hope you can take something from that video, and I've left obviously that profit and loss tool on there just to emphasize that, and of course just to rub it in my own face. But nevertheless, as I've mentioned, valid reasons not to take the position, good reasons to take the position, but when in doubt, you simply stay out of the market. So I'm going to get on with my day. My alerts are set for price to return back to an area. I'll await my entry criteria, and then I'll be looking to take a long on Gbpcad and also a long on GJ, hopefully. And we'll see how that cookie crumbles. Until then, everyone, good luck in your trading journey. Pay attention to your trading plan, your trading strategy. And as I always say, have a plan. Understand the worst case scenarios when price come back to your areas in the market that you're looking to take positions from. Have a plan, have a plan, have a plan. And when the price comes to your area and your plan materializes, simply just execute that plan over and over and over again until it's boring. Take good care, team. All the best in your trading day and your trading journey. Charles.